The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 20th wonderful Wednesday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone at any time. Dial on in 877-927-6648. Would love to hear from you, see what you're looking at. We'll put as many tools on whatever chart it is to help identify what it is doing, what the buyers and sellers are doing out there. So, of course, you can give us a call internationally, 727-445-1044. I don't know if I said the number, but locally, 877-927-6648. So let's go ahead and get this show started on this wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 62 points at 18,115. S&P's up 4, trading at 2104. NASDAQ Composite up 12. Russell 2000 just slightly above the zero line out there. The DAX closed up 72 points. The FTSE closed up 5. Gold is trading up $1 at $12.55. Silver's up 19 cents at $17.17. Light sweet crude, now depending on which contract we look at. If we're looking at the June contract, that's up $1.43, trading at $43.89. Lead the charge here to the upside. Brain salad surgery, Intuitive Surgical. That's up $19. That's up 3%. Priceline is up $11, about 0.8%. Manhattan Associates up 14%. That's $8. VMware up 13.5%. That's $7. Tesla is up 5. Amazon's up 5. To the downside, Regeneron Pharmaceuticals is the struggling equity, dollar-wise off 16 bucks. That's 4% to the downside. Alere Inc. also off. That's off 15%, down $7. Biogen BIIB, that's down about 3, a little about 2 6/10% off 7. Signature Bank of New York down a little over $5, about 3.5%. Okay, so where do we begin? Where do we begin when we take a look at these markets out here? Well, the first question might be, are there any patterns on a short-term basis that would suggest a top or not? Well, let's go take a look at the ES Mini. Now, let's make sure we stay tuned in here, into our time frames. And there's potential. Well, if we take a look at, let me see here. Is that even doable? Let me see here, because it might be that hammer candle. The pattern here that I would say, and we'll forget that. I'm going to go ahead and turn the wave counts off on this for the moment, because the pattern that is most important to you and I with regard to tops or bottoms is right here where price is moving higher, in this case, doing it with less relative strength out here. And the session that we're in, this is a 30-minute chart, so this candle session that we're in right now doesn't end for another 19 minutes and change out here. But it did, at this stage, it's forming a bearish reversal signal, bearish engulfing candle. Now, does that alone go ahead and say that that is a top? It's the first step, that's for sure. Second step is follow through on the very next candle session. So that means, let's say that there's some kind of toppiness on a short-term basis going on in the market right now. We would have a pretty good indication by 2 o'clock. Now, at that stage, this is trading at 2098. If, in fact, we were to see a close below 2094, so it's really not that many points down, right? 4 or 5 points to the downside out here. That would be a close below its TAS market profile, which John Logan, I believe, is doing a workshop tonight. And if you haven't signed up for that, you should say to yourself, why? You got to go sign up for that. The market profiles that we use out here, I mean, talk about driving. It's like driving without rear view mirror and side view mirrors out here. And you would never want to do that. You would certainly never want your kids to do that out here. And you wouldn't want to do it either. So we've got a potential on a short-term basis inside the ES Mini out here. But let's say that pattern doesn't really turn into much, or doesn't actually go ahead and give us that signal, at 2 or 2:30 or 1:30, or any time during the day here, and the market keeps motoring higher. Is that a possibility? Yeah. Well, everything is bullish. Everything is outright. There we go. It's outright bullish as I take a look across the board, just simply everywhere out here. And so that begs the question. Actually, when we take a look at the Dow, let me go take a look at the Dow. And because one of our donors posted something that's really important for us to take a look at, which is, let me turn off some of these tools out here. And this is why I think that it's really important. Because, myself and others were looking for this top to come in. Of what consequence, we don't really know just yet, but many of us are searching around looking for tops. The question that you always have to ask yourself is, well, what if you're wrong? What if we're looking for the wrong thing out here, right? And so how will we know? That's really the question that I would pose to you. How will we know? Well, let's take a look at actually what I should do is put this on a monthly basis. It'll be easier for you to see. There'll be wider candles, bigger candles out here. So let's do that. Let's go to the monthly chart. In fact, let's go to the monthly chart because it will really be important out here. And what we're going to focus on and take a look at is the all-time high inside the Dow, which is 18,351. We're at 18,117 as we speak right now. There is no reason that you're trading into that swing point. There's no reason for the Dow not to go try to tag that and take it out. And therein lies the problem with regard to us looking for a just simply overall top out there. And you might say, what the heck are you talking about, Willis? Well, I'm not Willis, but let me show you what it is that I'm talking about out here. Let me switch to, I think it's this tool right here. And I was doing this just before we came on the air. Here is the Dow. And the same deal with regard to the S&P 500. But here's the Dow. All right, here's our Dow monthly chart, just looking at it a little bit differently. Now, off of the low, off of this little key reversal session back here in October in 2011, if we take a look at our wave counts to the upside, the Dow at that all-time high made that seventh wave move out here. It did this in May, obviously, of 2015. If that gets taken out, and you are a believer in wave counts, which I am, by the way, it's an extraordinary tool out here. If that gets taken out by just 1 penny out here, it says that this wave count has recycled. And all of us looking for any kind of major top, we got to pull our head out of wherever it is that we're looking for that. And that's how close we are to this whole thing recycling. It is the same situation inside of the S&P 500. So remember, even though we're looking for one thing, this is a market of bulls and bears, and you've got to always be looking at both sides of the trade. Take a look at this. Same pattern inside of the S&P 500. When it made its high out here, this is in May of 2015, it also made that seventh wave move. Now, the high on that session is 2134.72. So you are less than 30 points away or so. If that gets taken out by just simply 1 penny out here, you know what that says? That says that the S&P has recycled up, and that measured move out here, that consolidation that it was in, that's the box that you see. That says 2,400 is what we would anticipate as the move inside the S&P 500. Something to think about. Steve Rhodes with TFNN. We'll be right back. We'll go to Mike in Ormond Beach. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 72, S&P's up 5. Let's go out to Ormond Beach and speak with Mike. Mike, thanks for calling. Thanks for holding. How are you doing this afternoon?
Great, Steve. Do you still think that we could get that pullback in gold to get down below 1,200? And, I was wondering, because of this move up that we have just had, if that had negated that possibility.
If it had negated. Well, here's my take on gold. So I'll go ahead and I'll put the monthly contract on gold up on our screen for us. And if we take a look at gold's movement since that February blow-off top, really it might have occurred in March here, but if we take a look at February's close, that's what I'm focused on. You had gold close at 1235. We're trading at 1254 right now. In a period of basically 7 weeks, gold at $1,250 an instrument has moved $15. So what is my take? It has done basically nothing for 7 weeks. And that says that, no, nothing is negated. The question is, who's selling into this rally? And the question with regard to who's selling into this rally is answered pretty easily by going to this chart. Give me a moment here to go ahead and switch over to this spot right here. So I'll show you this chart. This is the chart right here that I take from data from the CFTC. And that takes a look at, in this case here, I really look at two different types of traders. The group that is referred to as the non-reportables. Those are the people that are buying this rally. Those are the small traders. And then the large-time traders, producers, called the commercial traders. And this data is as of last Tuesday. I will get this week's data as of this Tuesday, and I'm pretty sure what I'm going to see here is who was selling into that rally, moving to a larger net short position as a percentage of open interest, has been these commercial traders. Now, what I can't tell you, Mike, is what is it that's going to start this move to the downside in gold? I can't tell you to the extent of it. What I can tell you is that these large commercial traders, they're early, but never wrong. And they have just continued to move to larger net short positions. We haven't taken out the highs, as you've seen. We've just had a lot of sideways action and maybe one day wonders out there. The silver thing yesterday could have been just a blow-off top. I'm more focused on gold, which was really your question as well. And, they just continue to build to larger net short positions out here. So that's my take on the data out here.
Okay, and I'm looking at the broad market too, with all these signs that we're seeing of possible topping. The price, RSI divergence, ABC's finishing up, and of course tomorrow night's a full moon too. So maybe.
Yeah, there's no question that, and you're exactly right. There are all kinds of topping type signals out there, like volume at the highs, price moving higher, doing a less relative strength out here. But the cavalry of the bears has just simply not shown up. They showed up in the NDX yesterday, and basically they said that was a false alarm out here because if we take a look at the NDX today, it hasn't taken out those highs. But it has done nothing to actually confirm yesterday's bearish candle out here. So, but the NDX is the first one that's given us any kind of potential signal. As I said during the opening of the show, well, let's say we're wrong about this. Let's just say this top out here that we're anticipating doesn't really come in.
Right,
and
I know.
so that's why. And because we're so close to the highs in the S&P and the Dow, if those highs get taken out, it is a totally different message out here, in my opinion, at the moment.
Right, and I know Basil has a possible Elliott wave formation to where once we do break those highs, we could be in Elliott wave 5.
Okay.
There's people out there that utilize that too. So
yeah.
It's going to be interesting.
Yeah, it will. It will. So, hey, thanks for the call, Mike, and have yourself a great day.
Thank you. Bye.
You bet. Let's go out to California to our man, Garo. Garo, thanks for calling. Thanks for holding. How are you doing this morning?
I'm doing very well, Steve. How about you? I'm
doing well. I got a little cold going. Don't know where that came from, but other than that, I'm doing fine. Thanks so much for asking. And your interest today is in TZA, which would be the 300% short of the IWM. So tell us what you're doing.
I need your opinion regarding this. Is going to roll up or not? Because if you check on TNA, Tom Nancy Apple.
Yeah.
It's been hit on 200-day exponential, and that happened twice, once in December, once in November. It hit that double top at the 200-day exponential, and it rolled down. And now, exactly at 62.32, it's right on the 200-day exponential. You have any idea that this can roll down so that TZA will roll up from here at approximately to the 21-day, which it did twice in the last few months, to $43.36 to 21-day simple moving average.
Okay, so let's look at that. As I take a look at TNA itself, I show that the 200 exponential moving average on my charting system gives us a price of 61.73. And we're trading at 62.33 right now. So the last 3 days, we've traded above that level. And as you pointed out, this area has held as a resistance point from back in November 2015. It got slightly above it back in at first in November 6th, it held as resistance. Then for about 3 trading sessions, November 27th, the 30th, the December 1st, and then December 2nd, we saw it close back below that level out there. So, the question is that a potential level of resistance? And the answer is yes. There's another area of resistance here, Garl, that I will show you. And I think it is important for us to look at the Russell 2000, and the TNA, because if the NDX gave us an early indication of a top yesterday, it would make sense to me that the next indication ought to come from the Russell 2000. And let me do this here. Let me see if I can do this. I'm going to put this is TNA. I've got to change over to the Russell 2000. Is that all right with you?
Absolutely.
Okay, so let's change over to the Russell 2000, and what we want to do is first turn off this volume line out here. I'm going to turn off those moving averages because I just want to go ahead and just keep a clean chart out here, and I'll show you another area of potential resistance, and that is just simply, Garl, coming off of, let's see, what kind of color line? We'll use a red line out here. If I take a look at the actual high, the tick high from March of 2000, so the 2000 high inside the Russell 2000. And I draw a straight line, and what I do is I go ahead and I use that straight line, and the next level that I use is the June 2007 high. notice how at this stage here, prices come right back to test that line of resistance. I mean, it's as if it hit it to the tick. Unfortunately, with these lines that we draw, just like a moving average, we use those. You and I, we use those as a guideline. Sometimes they hit right to the, right to the price. But you and I, we use those more as a guideline. And so if the Russell's going to top here, I would say you can use your 200-day exponential moving average, and we can use from a monthly basis this trend line. If price breaks above this level, then where is it headed to? Well, I would say at a minimum where it's headed to, is the recent highs in November of 2015. That would just be a logical spot for the Russell 2000 to head to. So that's my take at this stage. We're going into a break. Do you want to hold?
Absolutely, yes, sir.
Okay, all right. We're going to go back to Garo, and we're taking a look at TZA, TNA, the Russell 2000. We'll see if during this break I can find any other clues as to what it wants to do. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 77. Russell 2000 is basically flat out here, and I'm on the line with Garo in California. We're taking a look at the Russell 2000, whether it's the TZA, TNA, the Russell 2000 Index, or the IWM. Garo, I'm going to put the IWM chart up on my screen out here because more people have access to this than the actual indice or the futures contract. And what we've already established, so Garo established that the Russell 2000 2000, the IWM is running into the 200-day exponential moving average, which, as he pointed out, has held as resistance, over the past, year or so out here. So it's at a very important tipping point. We also went ahead on a monthly chart, and we saw a resistance line off of the tops from 2000 and 2007. So we've got another level of resistance. And if we take a look at, you and I take a look at the daily chart of the IWM, one of the patterns that we like to look at is when price is moving lower, doing it with less relative weakness, as it was back on February 12th. That's the low that we're taking a look at. And from that low, if we just simply start doing our wave counts to the upside, what I like to do is really focus on that seventh wave session, that seventh inning stretch. And from the bottom of this February 12th low to where we were yesterday, yesterday's high, so if today's high does not get taken out, that would say, okay, you've just made a seventh wave. Now, people that like to trade these wave patterns, they're really easy to trade, in that you go ahead and, in this case here, you would go ahead and take a short, and you would place your stop just 1 penny above that level. Because if it gets taken out, it says things recycle, and they can, you've got a strong move that is underway. Now, you don't have to trade it that way. You can just look for other signals. Now, price has also been moving higher, doing it with less relative energy. Now, the difference is, at this stage here, we have not seen any kind of bearish reversal signal. Let's say, Garo, that today, as an example, we end up with another small-bodied candle like we did yesterday. It's kind of like a spinning top, like the market's spinning its wheels up at this high out here. If tomorrow's session, so let's say today we're to end right here as we're taking a look at the chart, and tomorrow we were to see a close inside the IWM of probably around around 112.62 or lower out here, that would actually be a reversal signal. And as long as that top doesn't get taken out from yesterday, that would be your signal that your observations are dead on accurate. That's how I would take a look, and that would be then the second indice to fall to give us a signal, the IWM. And that's kind of my take. What else are you looking at, though? Because I know you use a sundry of tools out there. How about the parabolic SAR? Is there anything that you've noticed there?
On the parabolic SAR, the TCA is too far away from the candle.
Okay.
Yeah, if you want to really go by the rules and regulations, the parabolic SAR dot is you have to go long at $44.27, which now is $39.37.
Yeah.
You see, it's long ways. But what I want to get is from here all the way to 21-day simple moving average, which is 43.36, and get out of there.
Yeah.
That's what happens twice in the past. Once it happened in 11th of April, and the other one it happened at 21st of May. That they both times they hit that 21. You don't use 21-day simple moving average. I do use that very much.
Sure. No, look, it's and that's great, and we absolutely appreciate the tools that you use and that you share with us. And that's why we're both trying to put our eyes on this to understand what it's doing. In the case of the TZA, if you do its counts from the high that it made on February 12th down to yesterday, you'll get that same seventh wave move out there. So you've certainly got really good indications. I will say, in the case of the TZA, I think I heard you say the 21 was around the 44, 45 area. Yes,
it is 43.36.
Okay, so at 45.06 is the bottom of a TAS market profile. So on any bounce in the TZA from here, that would be your first level of resistance, there as well. So just an additional tool to go ahead and put out to you. So I see that trade. My bigger question is, in my mind, is we are so close. The market is so close to testing its highs again inside the Dow and the S&P 500. That I'm absolutely looking at both sides of this trade out here. Even though I've been looking for topping conditions, and I still am, I just have to open myself up to the fact that if we take out those highs, it's a different message. That doesn't mean we don't have some kind of retracement, but it sends a whole different message with regard to the tools that I look at.
Very good. Thank you, sir. Thank you very much. Regarding that, Visa is still going up, though. You remember we were talking about $77.
Yes.
You told me that there is an indication that there's going to roll down, but still at 81. I'm trading it every day at 1,000 shares at a time, and it's very profitable to me. I want to see when it's going to roll down, but in the future we'll talk again regarding that matter. I do thank you very much for your time and listening to me. Thank you, sir. Goodbye.
You bet. Thanks for calling. That was Garo in California. Let's go out to Nashua and speak with Steve. Steve, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm doing well. Thanks for taking the call, Steve.
Sure. My pleasure.
Yeah, I called about Eagle, but I realized about 2 days ago I called about that. Is there any way I can just switch it to ORIG?
Hey, I'm sorry, you've worn out that mat. No, I'm just kidding.
Oh no.
No, I was gonna try to go with that line. It's from the movie Draft Day. I don't know if you've ever seen that, but Kevin Costner, he's negotiating and he says, "I'm sorry, but we live in a completely different world now than we did just 30 seconds ago." So, of course you can. Tell me what it is you'd like to look at.
Yeah, it's Ocean Rig, ORIG.
ORIG. Okay. So as we take a look at this, so are you in this? You're looking to get in? Tell me what
No, I'm not in it. Eagle is also in same business as these guys, but I'm looking at a 1-year weekly, and I'm looking specifically at last October's swing high, I think it is.
Okay.
With weekly, mind you, 21 million shares, I guess.
Exactly. 21 million shares, yep.
Versus what's going on right now, it seems to have a little upturn in it.
Yeah. So the bottom of that high volume session out here at 202 says that from 202 to 294 that could be a relatively large supply line, meaning that those folks that had bought in during that week, they weren't too eager to see that this equity move lower. And when things got down to 66 cents, they were probably saying, what in the heck did I do out there? So those folks, if this is getting back, as it gets back into this level, that could be your instant sell area, or where it really runs into a problem. Now, as we speak today, if we just simply go ahead and take a look at our TAS market profiles out here, we can see that for the last 2 trading sessions, that prices run right into both the top of a daily market profile and a weekly market profile. The daily is priced at 142. The weekly is priced at 148. And what that says to us, Steve, is that is a significant level of resistance, which would mean if Eagle could close over that, what it would target next, Steve, it would target the high volume bar from March 7th. And that would be at 167. And if it were to clear 167, then it could make its way off to that 202-ish type area out here. But right now, it's really struggling. And ideally, it will pull back, probably to 98 cents to $1.03. But I see we're going to a hard break. Would you like to hold through this break?
No need to. I appreciate your information. Thank you very much.
Okay, you bet. That was Steve in Nashua, and we were taking a look at Ocean Rig, ORIG. Dow's up 81, S&P's up 6. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no questions asked money back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 85, S&P is up 6. You know, when Garo and I were talking about TNA, TZA, IWM, Russell 2000, this is another one of my charts out that here subscribers get each day in my expanded edition of the newsletter. Now, it shows the same thing, but on this chart here, what I do is I do keep the 50-day simple and the 200-day simple moving average. Now, the 50-day happens to be the green line out here. The red line happens to be the 200, as Garo and I were talking about how prices basically, now this is the simple versus the exponential. He and I were looking at the exponential moving average. But the Russell 2000 is still in that death cross mode. In other words, that's where the 200 drops below the 50. That took place out here right around August 20th of 2015. You'd actually be surprised at how many of the indices are still in the so-called death cross mode out here. You've got the Russell 2000. That's clear that it is. Let's go check on the S&P 500. Let's go put this chart up here on the screen. In the case of the S&P 500, it is as well. You had the death cross out here that occurred, looks like, where was it? Looks like maybe right around, no, I take that, no. Where, oh, it occurred right here. Thank you. Hello, wake up. Wait a minute here. Wait. You've got the, I must have my lines mixed up and colored here. Yeah, so the 200 is at the, that's at the 2014. Yeah, so you've got the 50-day crossing below the 200. I think I just said that backwards. My apology for that. And it still is below that level as we speak right now. So you still have that death cross, which looks like right around January 11, 2016. You know, it's moving up. You got 2003 for the simple moving average for the 50-day and 2014. We can see price here moving higher, doing it with less relative strength out there, but really until the cavalry shows up, it's just a, hey, it might rain out there, you know, which is like a weather forecast in Florida, which means basically every forecaster says it might rain today or there's a chance of showers. The question is, you know, where are those showers going to fall? If we look at the VIX index out here, this is the VIX index with the S&P 500, we're going to see that today the VIX made a lower low than it did back here in the trading session of April, I think it was April 1st, actually. This is showing up as April 4th, but I believe it was April 4th or April 1st out here. Nonetheless, we did get to a lower low today. You're trading at 1274. And that says that from the highs out here, looks like back on February 12th, that this is now down to wave number 7 out here. So the market, as we have taken a look at it, it's really at this, it's at this juncture where tops are supposed to form. Doesn't mean that they always have to. Oh, you know, the other thing that we got to pay attention to and certainly focus on inside the Index 100, inside the NASDAQ composite, is going to be that island reversal. that island reversal top. Inside the NASDAQ composite, we're not near threatening that just yet. That would be up in about the 5063 level. The actual number that we'd be looking for is 5065.68 out here. But, well, the NASDAQ composite did not have a bearish reversal signal yesterday. So there's no reason for it to not continue to move higher. If we take a look at advanced decline data inside the NASDAQ composite, it's above zero, says buyers are in control, just as they were yesterday. We talked about that great Who song, won't be fooled again, or don't be fooled again, as Stevie likes to refer to it as. And, it was saying that move lower yesterday just didn't have the, emphasis behind it. If I take a look at the Dow, here's the thing. Why could the Dow just simply go ahead and take out those highs? As this is moving higher, here's its advanced decline line. It's making higher highs as price is making higher highs. That's not a diverging pattern. A diverging pattern is when price makes a higher high, as it was doing back here from about the February 26th time frame, as it was going up. And then it made just a shallow retracement. Oftentimes, when price moves higher and the advanced decline line is not confirming, you can see a larger decline. There was basically no decline whatsoever, right? And at this stage here, if we take a look at the Dow, its message is that it's confirming, even with some problems that it had with Goldman Sachs and whoever else. I don't know whoever else might have led things. Maybe Intel was supposed to be a problem, but it's not a problem, right? It's moving higher today. So if we take a look at this, the Dow says that it's going to go take on those highs. And if it takes out that high, you would either have to be a person that ignores those wave counts to be able to say, oh, my goodness. And the same with the S&P 500. You've got to start changing your position out there. Not yet, but we've got all these indications that really could legitimately happen. I don't know which way it's going to pull out. I can tell you right now, looking at the Dow, there's no reason for it to not go ahead and move up there. And in the S&P 500, if we go take a look at this chart here, here's our chart that takes a look at light sweet crude. Now, in the early session, we looked at the June contract. This chart here is taking a look at the May contract. I can switch them over. We can look at both. But here's what we know about May, both in the case of for light sweet crude. We know that at this is a 30-minute chart out here, that at 11:30 this morning, what light sweet crude did was got above its TAS market profile, its weekly high out there. There's nothing more bullish than getting above a level of resistance. And this was a level of resistance. Just take a look at 11 o'clock in the morning on April 19th, how that absolutely held. So if light sweet crude is going to move higher, and both you and I know that correlation is out there, directional correlation between the markets, that says that the S&P 500 can also go ahead and move to higher ground. And by the way, the ES Mini out here, it's above its weekly profile high of 2095.75. So what does that say? That says you set your sights up on the swing point. In this case here, the all-time high swing point. And look, if I go ahead and let's switch this over to the inside the case of light sweet crude, let me just change this to the June contract out here. See if there's any different message out here. Looks like this is probably above. Let's just wait till it populates. Yeah, this is above its weekly profile. So the June contract, the July contract for light sweet crude is above significant resistance. 4206 happens to be inside of the June contract. So that just goes back to that premise that I don't care that we're looking. Seventh wave can just extend itself inside of the VIX index, and we're not at a seventh wave inside of the S&P. So price can continue moving higher. This price moving higher, and if I look at all these red little box letters on my screen, ever since the bottom out here on February 11th, these are momentum indicators, part of my Rhodes momentum indicator series out here, and without any green box showing up, this tells us, light volume or not, volume is only one pillar of our arsenal out here. Can you imagine having a table with just one pillar out there? It'd fall on its face, right? So we utilize 4 pillars out here, and one of those pillars, in addition to volume metrics, is take a look at momentum. The momentum out here inside the S&P 500, off of that bottom, is just been huge, if I can say huge out there. So I'm not seeing the signs that we should see, that we would typically see, that would be associated with these highs. And again, back to the S&P and back to the Dow, they'll be the next ones to give us some, and really the Russell 2000. We spent a lot of time on that with Garo, so we know that there's significant levels of resistance to be looking for. So I've got one eye on the short side, and I've got the other eye on taking out those highs and saying, you can sell in May all you want, but the market's not going to turn down until July. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 97, S&P 8. I have a request to go take a look at the U.S. dollar, Japanese yen, and Valley, V-A-L-E. So let's go take a look at both of those. As we take a look at the U.S. dollar, Japanese yen, here's what we know. Give me a moment here. I'm going to go ahead and just take a few things off of the screen. So we know that as it made its most recent low out here, back on the trading day of April 11th, what it was doing, let me turn off a couple of other things too. Let me turn that off. Let me turn this off. So we saw that as the market was moving down there. Now, I don't see any pattern as to reasons. Well, let me just hold on a minute. I'm on a different screen here, but let me just real quickly do this. If it makes sense, I'll go ahead and bring it over. No, I don't. So as price was moving down here, I mean, there's no A to B equals CD pattern, that sticks out to me, Danny. What I do know is that you had a nice little bullish engulfing candle that formed out here on April 12th. That says support inside of the Japanese yen is going to be the low of either that session or the session before, whichever's lower. Well, that happens to be the April 11th session. So 107.63 is the number. We can see right now that this little outside day right here from April 15th, that high is important for the advance higher. So if the U.S. dollar Japanese yen can close above 109.73, right now you're trading at 109.75, so it sounds like it may be able to do that. You've got a small A to B equals CD to the upside, as one pattern that you could look at. That would go ahead and give you a price projection, of what you're about to, which is about to hit out here. That's just one level, maybe the 109.94, 110.51. Even one. It just depends on the extent of the move and how this level gets hit out here. So that'd be one way to take a look at it. Another way would be take a look at just simply, some type of Gartley sell pattern, which would go from the high of March 29th down to where that A point began. You could see that, the yen ought to struggle around this 109.91 level. But if it can get through there, Danny, I would say 111.44, looking at it from a daily perspective, would really become your target. Let's go take a look at Valley, V-A-L-E. Yours Vale, maybe, I don't know which one it is. But if we take a look at it, it's trading out at 621. And this has had a nice move. Looks like there's an A to B. We'll see if it's confirmed or not, but there certainly is a A to B equals CD price projection that is going on in this. And that 1-to-1 is what it's hit today. Now, the B point would be about $4.89 on the trading session of March the 7th, and that was taken out with lighter volume. That had a volume of 81 million shares. Price moved above it with 58 million shares. We haven't seen an 81 million share a day. Remember, volume's only one stage of our one element that we take a look at. So at this stage here, what happened to my A to B equals CD out there? At this stage here, this is going to set up more than a 1-to-1, in my opinion, because you're hitting that D point today. Come on, work with me here. Shoot. Because I scrunched it. Scrunch is a technical term. That's okay. I got 1 minute. I may not hit the exact A point, but I'll just use this. There we go. Just a bigger candle for me to hit. So, in essence, it's hitting the 1-to-1 today, but you're coming into this D point, right, the CD leg, with the widest ranging bar. Price doesn't stop with the widest ranging bar like that. That says that Valley, V-A-L-E, should head up to 695 next out there. If I look at any market profile data, let's go see. My guess is that we're beyond everything out here. Yeah, so we're beyond daily and weekly. There's nothing there to hang your hat on. If I take a look at other swing points out here inside of this equity, there's really no reason for this to not get back into the highs from May 6th. Which is somewhere between 819 to 895. So I hope that assists Mick. Is it Mick? Is it Mike? Is it Mick? In the Tiger's Den. Hey, folks, stay tuned. Our man, the polar bear, David White, is up next. We got the Tom O'Brien Show from 3 to 5. And don't forget, get on over to the homepage at TFNN.com. John Logan's got a great workshop tonight. Hey, even if you can't be there, it'll be archived on your members page. Have a wonderful Wednesday. I'll see you on Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.